Thank you, everybody. First of all, I just want to say this is a special session for two reasons. One, this is a session co-organized by the Insurance Authority and the Academy of Finance. We are very glad to be able to, or very privileged to be able to host this session with the Insurance Authority. And second, the issue of diversity in the morning has now been addressed. So Clement has actually done a good job. Actually, the presentation just now by Mr. Dixon has already laid the foundation or the setting for this session. He actually spent quite a bit of time talking about the risks of posed by climate change. This is a long-term issue. And the reason why we put together this session is also because of the fact that looking around the world, watching the news, it is quite clear to us that climate events are becoming more frequent, more serious, more widespread, affecting more sectors, more countries, and the issue is continuing. I remember that just before COP27, I saw an article with the title, Say Goodbye to 1.5 degrees Celsius. And then another title of another article saying that, look, with all the things we see, we're only at 1.2. We are not at 1.5. So the issue is still developing and evolving. So today we have gathered together a panel of expert speakers. Thanks all of them for coming here to share with us. So we will want to take this opportunity to discuss, the policy issues concerned, the market developments related to this subject, and most important of all, to consider what we together could do on this subject. So thank you very much. The MC has already introduced briefly our speakers, so I don't want to spend any more time on this. So let's start first of all with Gillian, if you could, because I mentioned earlier on that we have seen increasing evidence of climate events and climate risks, or the impact of climate changes. Well, as I'm not an insurance professional, I can only have a broad and general feeling, but reinsurance companies must have been looking into this question in very close detail. They have all the data around the world on specific sectors, on specific industries, so on and so forth. So could we ask Gillian, first of all, to give us a broad overview of how you see all the whole subject of climate developing around the world with a little bit more focus on the Asia-Pacific region in particular?
Sure, and thank you very much for the invitation to join the Asian Insurance Forum. I'm very pleased to be here virtually. And I'm going to share some thoughts around how reinsurers and insurers are impacted by climate change and, importantly, how they're responding. And there are a number of ways, right, that climate change is impacting us in the industry, and we already heard some of that by the previous speaker. And I want to make the point that it's happening on both our non-life business, property and casualty, but very much also life and health segments. And it brings both risk and opportunity. So I'll mention first a couple of the significant impacts that we're experiencing, and that is around rising losses, but also the increasing expectations of all of our stakeholders. So on losses, just as examples, right? Flood and drought, ever increasing worldwide, and you see that very much in Asia as well. China, Malaysia, Pakistan, Australia, you name it, right? It's happening in many, many countries. Heat waves are another really important, and this is causing increased mortality and morbidity across the world. We saw that very much so in the latest Northern Hemisphere summer. Also in China, India, Pakistan, Australia. And it's really, heat is really causing a huge amount of impact. Heat extremes are becoming more frequent, more intense, and longer lasting in this warming climate that we're in. It causes mortality, not just in humans, but in animals, reduces labor productivity, affects agriculture, ecosystems, human systems, and cities are hotspots for this. So just those comments around heat, it's quite alarming, right? Now, another impact that I mentioned before is around stakeholders, and every single stakeholder group or interested party of an insurer or reinsurer has increased expectations around our action, more broadly on sustainability, but especially on climate. It starts with climate. And that is an impact for us, right? And I welcome this increased expectation and scrutiny. I think we can do more and we need to do more. And happily, we are doing more as an industry. So I'm just going to speak a little bit more about the way the industry is responding, and it takes different forms. As insurers or reinsurers, we have a number of levers that we can pull that impact or contribute to sustainability and help us manage climate risk and climate change. And that is around our investments, how we invest. It is around how we run our own operations and the examples we set. And really, really importantly, how and what we underwrite, the core of our business. And for some insurers and reinsurers, there's also R&D, because we have a lot of R&D going on in our industry. 5 more specific ways that we are responding and pulling those levers I mentioned is committing to net zero by 2050 and really striving towards limiting temperature increase to 1.5 degrees. A second way is risk management, the core of our business, expanding what we do along the risk management continuum and moving from just protection to doing more on prevention and adaptation. A third is updating our models, our CAT models, for example, and therefore always improving our ability to predict and assess climate risk because it is changing. Another is understanding the impact of climate change on our underwriting portfolios. And certainly at Swiss Re, we're doing that. We're publishing that in our annual TCFD reports. And we're also working with our clients to help them understand what's going on with their underwriting portfolios under different climate change scenarios. And I want to make this point, this really important point around opportunity and the role of insurers and reinsurers. We are enablers. We're enablers of new technologies. We're enablers of providing protection. So we need to embrace that. And we are. And we need to do more. One is around innovating on products, closing protection gaps. And it's not just natural catastrophe protection gaps, right? The protection gaps for life and health are enormous worldwide. Expanding to services and solutions. So not just paying claims, but helping people out if they're under an enormous stress, say, if their house is flooded. It's not just paying the claim, maybe it's providing mental health support too. And insurers can do that, and I'm seeing them do it. And very, very importantly, partnering via industry alliances, such as UN, Principles for Sustainable Insurance, via research and development, and critically, public-private partnerships. So how we, the private sector, work with the public sector. And I was asked to make a couple of comments on maybe some expectations of what governments could do more. So 2 points here. And this is really important for this climate risk topic. Where people build and are people putting themselves in harm's way, I believe that governments can do more in limiting and stopping, allowing some building developments in the wrong places, right? So the insurance industry should be doing all that it can to maintain insurability and affordability. But that becomes very, very difficult if people are allowed to build in highly exposed areas. So there's really a point there that absolutely needs to be addressed worldwide. And the other one is considering risk pools. And there are many great examples worldwide of risk pools and spreading risk that way. So that will be another thought on the government front. And with that, I've packed quite a bit in there. But with that, I conclude my opening remarks. And I'm very much looking forward to hearing from the other panelists and the discussion thereafter.
Thank you, Gillian. You raised a number of issues. We will have to follow up with them later on. But pardon me for saying this. You mentioned earlier on that you are thinking how you should help your customers to underwrite, how you are going to underwrite your business, so on and so forth, partnering, innovative products, servicing, and so on. But again, from a non-insurance perspective, I'm just an economist. Does that also mean higher pricing as climate risks keep building up? When do you see the risks will get to the point when, the underwriting pricing, the insurance premiums, and how that affect, actual businesses, how that will play out?
So I think certainly in some areas prices will go up. I think that's a fact, and it is incredibly important that the insurance industry tries to focus on how we can continue to make insurance affordable. But it is a fact in some areas the price will go up because the risk is going up. So what can we do to then reduce that risk, right? What are measures that we can put in place? I'm thinking of a really great example I see in Australia, and I want to use an example here. So there's an Australian insurer who has a resilient road initiative, and they have identified measures that homeowners can put in place to reduce their risk and therefore reduce the premium. So what else can the insurance industry do to help people understand affordable measures they can put in place in their homes or for their health, for example, that actually does help us to keep that price to an affordable level?
Right, exactly. I think even if the governments are not doing enough, private markets, the pricing mechanism will make sure that all the risks are really priced into it. Then people will start to do more. We also have an issue that I really want you to highlight, because as I understand it, a lot of the business, a lot of the professionals in Hong Kong are in the life and health business. And I get a rough feeling that every time we talk about climate, people think about properties, people think about general insurance. I talked to some of the life insurance people. They said that, yes, we are looking at this subject very closely. But so far, if you look at mortality rates and health issues, the impact does not seem to be very serious. Is that really true?
I think we're seeing it play out. I really am. And I can certainly say in Europe, with some of the heat wave years in 2003 and the one just been, it's increasing mortality, right? And what was also on the morbidity front, you have an increase in the range of vector bearing things like mosquitoes, right? Who can spread a lot of diseases to people. We're seeing that increase. So is it playing out in a heavy way on claims? I am not sure yet, but we're certainly starting to see it, the impact, absolutely, on both health and life.
Okay. Of course, this is a very big subject. We can keep on talking about it, but in the interest of time, let's move on. Gillian mentioned earlier on the need to work together with the governments. On this particular point, can I invite Christine to update us what really happened to COP27? I remember that the UN Secretary General said that we are on a highway to climate hell with our feet on the accelerator. And he was obviously appealing to all the government negotiators to, come on, let's act on it. The media story suggests that we haven't achieved very much, apart from all these, compensation for the developing countries. Could you give us an overview of the key issues, the key developments, and what are really important?
I think the main thing about these COP meetings is they happen every year. And actually, prior to the annual COP meetings, there are other working meetings. So actually, this is a permanent mechanism for multilateral discussion. So it's important to understand that governments are talking to each other kind of all the time. Now, at any one particular COP, we can say whether it's done more or less. And I think at the multilateral level, there are other things that kind of get into the way, like geopolitical issues and so on. But leaving that aside, and that's what I'm really saying, let's look at the permanent mechanism that is there. Let's look at what the Paris Agreement, it's at least set a kind of benchmark. And let us not forget, every government, every 5 years now, they have to come up with more ideas on what to do. So, give it a little bit of time. Our concern is that we're not moving fast enough. And I want to pick up on one of the points that has already been raised, cooperation with government. Actually, I see government differently. I see government as providing, and governments are really the only institutions that can provide what I call public goods. So, for example, to change the law so that we're going faster on certain things. Protecting, for example, we talked about human beings and our tolerance of high heat. Now, we know this is going to be a problem all around the world, including in Hong Kong. So you might ask, well, what are some of the laws that we will need? So, for example, Hong Kong and many other places are going to actually have to set laws in the future about working hours and on what day you actually don't want people to work outdoors if the temperature is over a certain degrees, because it's not going to be just 1 or 2 days. It's, could be extended days. So these are public protection of the public good. So, that's where humans are involved. And infrastructure, adaptation against landslides and flooding and sea level rise, these are mostly public investments. That's you and I paying for public investments. The private sector, where they have property, they will have to do their part to protect their private assets. And this idea about government maybe stopping people building in certain highly vulnerable area. I mean, obviously, you can imagine how contentious that is in many places because it affects private property. This kind of discussion is actually really important. And I think it's really important not at the COP level, because at the COP level is multilateral. We have to bring targets and timeline from the multilateral level back down to our own jurisdiction and discuss locally what we're going to do. And so I think my final word at this stage, it's just that even in Hong Kong, having actually wider and broader discussions about what we can do with our building stock, what we can do with our city to cool it. Because, for example, in Singapore, they actually have a policy to cool the city. And cooling the city means transforming the infrastructure, because we have many buildings very, very closely together, right? That makes the middle of the city very, very hot. So all kinds of things the public sector have to engage. But of course, civil servants and politicians are like you and me. They don't know everything, and we can only meet the climate challenge by actually cooperating, because I think that's another big point that previous speakers have made. The issue is how we cooperate. What kind of collaborative platform do we create so that the knowledge from different sectors, including the insurance sector, can actually be blended into our policies, and how we can dovetail different industries into working smarter, fast, and faster.
Yeah, you raise a very important point. It's not just climate impact. It's not just dealing with the risks and the results of climate. It is also moving on to a stage where climate impact is there. It is not going to go away. It's going to get worse. So we just live with it, adapt. And then you emphasize a lot on what the government could do or should do together with the private sector. But I think it's also important to realize how the financial services industry as a whole could work together on this aspect. It's not just mitigating, it's not dealing with the risk, it's also dealing with adaptation. On this particular aspect, can I ask Emily to tell us, from an investor's perspective, how you look at all this range of issues and this transitional process? Well, we have heard a lot about this, transition from brown to light green to deep green. How do you look at all these financing issues?
Sure, thank you. What a pleasure to be here today in person, finally. How refreshing. So let me just start first by explaining where BlackRock falls into this equation. We've heard Gillian and also the keynote speech before talking about what we can do with the asset side of the equation and our investment portfolio. So it's our role as a fiduciary asset manager to really help clients to build investment portfolios that meet their investment objectives. That's our job. And it's our belief that integrating sustainability into how we invest will create more resilient portfolios that have better long-term risk-adjusted returns. And for our insurance clients in particular, obviously these issues are inherently long-term in nature. So the way that we think about this is basically threefold. Firstly, it's through the investment solutions that we offer against the asset class and investment style spectrum. Secondly, it's through the technology, the data, the analytics, and the reporting that we provide to clients to really empower them to make more informed investment decisions. And then thirdly is obviously through our ongoing stewardship activities that really advocate for improved investment outcomes on our clients' behalves. So I can touch on each of those in turn in a second, but at a high level, I just wanted to kind of talk about a global insurance survey that we run every year. And the 2022 edition was the 11th, and it covered something like $28 trillion of assets across 26 different countries. And what we saw this year is really a strong trend of global insurance clients really embedding sustainability and in particular climate more carefully into their investment management activities. And yes, in Asia, we're still a little bit earlier in that implementation phase, but actually we're really seeing interest and activity pick up in this region. So a couple of interesting stats. 88% were likely to join climate-related industry initiatives in the next couple of years. 86% were planning to set some sort of climate objective, and 90% were planning to increase their allocation to impact investments. And those numbers in APAC were actually exactly in line with our global findings. So the ambition for insurance clients in Asia is actually just as strong as it is in the rest of the world. So this goes to say that we're kind of moving beyond the why now. I think we're all seeing the financial evidence of the costs that are happening as a result of the impacts of climate change. But really what clients are looking for now is really the help with the how. And that's kind of where we get back to the three things that I mentioned before. So when we talk about investment solutions, this is increasingly becoming a holistic whole portfolio question. This is no longer a case of just doing a token allocation to a green bond on the side. This is now having to be embedded top down into your strategic asset allocation as well as bottom up in the investment solutions that you're choosing. So when you're talking about top down asset allocation, you've got to take stock of where you're at now, really analyze what your portfolio might look like under different scenarios, and then think about where you're getting to. For example, if you've made a net zero commitment, what does that look like? So at BlackRock, we've embedded these considerations into our capital market assumptions that feed our strategic asset allocations. Now, once you've got that idea, what does that look like when you look at bottom-up investment implementation? You've got the core of your portfolio where you might be looking at replacing building blocks across your equity and fixed income portfolio with sustainable equivalents, and then complementary to that, really taking more of a targeted approach in thematic and impact investments across the public and the private market space, and really dialing that up and dialing that down, commensurate with whatever objectives you've got around kind of real-world sustainability outcomes as well as financial outcomes. And really kind of decarbonization of the investment portfolio has been something that's been around for a while now. But typically the more green or more sustainable plays, should we say, were what was typically in focus up until this year. And this goes back to your point about brown to green. Now, what we're seeing as a result of some of the geopolitical disruption that we've seen this year is a more nuanced focus on what the actual transition itself looks like, and more receptivity to the idea that it's possible to still invest in carbon-intensive assets if they're improvers. So this question of brown to olive to green. And that's where there's a lot of opportunity. It's also where this is a really, really important question, particularly in Asia, where the carbon-intensive assets are actually a lot younger. They can't be retired from the system without a lot of socioeconomic disruption. The second kind of area of focus is really around the data and analytics side of the equation. That's important for three reasons. You need to actually understand the climate risks of your portfolio. You need to be able to act on the climate risks of your portfolio. And you also need to be able to report on them to your various stakeholders, such as regulators, your board, and other external parties. Now, we do see our insurance client base as being a lot more sophisticated about how they analyze and interpret these factors, but they're still telling us that more needs to be done to really make this more consistent and coherent. So we're definitely seeing investment in this space, and certainly we ourselves are investing in this space across the data solutions, across the high conviction analytics that really help you to interpret them, like stress testing, like scenario analysis, and really the end-to-end platform integration that brings all of those needs and use cases together in a useful and coherent way. And then one last point is just really around stewardship, definitely increasing focus on engaging with the underlyings that we're invested in. I think something like, from our survey, about 92% of respondents were intending to engage more with their underlying companies on these topics. So I'll just stop there, but key messages, investment solutions, technology, stewardship, and Asia might be a little bit earlier in this journey, but certainly catching up and plenty of opportunity in this part of the world.
Thank you, Emily, for this very broad overview of the whole subject. But just a very short question: do you have any sense what the insurance companies in Asia in general? I mean, their attitude in terms of impact investing, in your area?
Yeah, I mean, they're still very much at the education phase when it comes to impact investing. I think a lot of people really still want to understand the intersection between financial returns and real-world outcomes. And that's where we are spending a lot of our time and focus at the moment, is really helping them with those questions.
Well, we could discuss this issue further, but before that, let's move on to Ericson. Ericson, you are actually a technology guy by background, and now you are working in an insurance company. We had speakers earlier talking about how to have more innovative ways of dealing with climate change and climate impact, climate transition, and so on and so forth. Could you tell us from a technology perspective how you are working with your insurance company to deal with climate issues?
Yeah, definitely. Great to be here, even only virtually, not physically in Hong Kong. I think, let me first reflect from a few points that mentioned by other panelists. Gillian mentioned that the insurance company can play a key role to address climate risk through investment, operations, and underwriting. And also, Emily just mentioned how the investment solution can shape us differently. So then maybe I will focus a bit more on the operation side and the underwriting and how technology fit in. And I can give a bit more examples to bring this method to life. So I would say in three different approach in insurance company or insurance industry as a whole. One, we can do a lot more on offsetting the climate risk by offsetting carbon footprint. And second is to prepare ourselves and help the communities, help our clients prepare for the impact from climate risk better. And the most importantly, the third level, I would say, is prevention. We can help our help communities prevent the impact from climate risk much better. So if I talk about carbon offset and how do we use technology to do that? When I say technology, it's not necessarily just IT, there's any technologies. So when we use some example, we work closely with companies like Climeworks so that we can do carbon removal. So use advanced technology to do that. So we can use direct air capture technology, so to able to capture CO2 directly from air, and then it combined with storage. It is possible to physically remove the CO2 from the atmosphere and then pump it deep underground. so safely and permanently. So this is a very, very tangible way we can help offsetting carbon footprint. And in terms of our products, like our business in Japan, Zurich, Japan, we launched a carbon offsetting proposition for our customers so that for our motor customers, the product allowed the customers to easily track the vehicle's carbon footprints in a simple digital tool, so that to let them to be accountable it by purchasing carbon credits to offset the carbon CO2 emission based on the estimated annual emissions. So in our Japan business will then match the offset by donating to reforestation projects with local government and local NGOs. So this is one of the ways that we can leverage technology to offset the climate risk. And then second way is to help use technology to help our customers to prepare better. For example, in Hong Kong, it's like there are certain areas particularly prone to a typhoon like Kung-wai and the likes. So we do give advance alert, advance warning, and then help our customer to prepare better. And not only for our customers, also help ourselves to prepare resources to preempt a larger influx on potential claims so we can help the customer faster, sooner. So we provide technical guidelines to alert, to assist customer to prepare, and to recover from any weather events. So this is the second way so we can help our customer prepare better. And I think the key is to how do we help the customers and communities to prevent the impact from climate risk. I think Gillian did mention about helping the customer to locate in a different location as such. So, and we, Zurich, have set up a flood resilience alliance. It's been a while already, so since 2013. So Zurich Flood Reliance Alliance is a multi-sector partnership focusing on practical ways to help communities to strengthen their resilience. So supporting today, there are 300 communities already in 23 different developing and developed countries, so that we reduce the devastation impact of flood before the flood hits. So we created in 2013 and allow users to generate evidence about the ways in which a given area or community is already resilient to flood. So, and this is operating across Asia, in Nepal, in Bangladesh, in Philippines, in Vietnam, Indonesia, and so forth. So these are a practical and tangible way so we can do to prevent impact from climate risk. So I think this is all critical and powered by technology and data, which Emily just mentioned, the data and analytics, the criticality of data and analytics play a key role here.
Yeah, okay, thank you, Ericson. I think you put a lot of emphasis on how you enable your insurance company to work closer with your customers to come up with all kinds of innovative ways in dealing with these kind of problems. I think that's a great approach. But going back to the earlier point about Asia and the apparent reluctance of or not so proactive stance of some Asian insurance companies in terms of investing in the green arena. I wonder whether it is a problem of Asia being one of the most risky parts of the world, so that there is always a debate that when we think about green investment, and if you really want to invest in truly green investments, the money probably will go to Germany, will go to Japan, will go to Europe, will go to companies like Microsoft. those money would probably not go to Indonesia or Bangladesh. Is that a problem? And if that is the case, how do we deal with it? You know, we want Hong Kong to be an international financial center. We want Hong Kong to be a risk management center. We don't just manage the risk in Hong Kong. We want to manage the risk in the region. We have a lot of multinational insurance companies whose regional bases in Hong Kong is what headquarters are in Hong Kong. So how do we deal with this dilemma? You know, the most risky countries, the most vulnerable customers are probably not the kind of businesses that commercially minded companies want to do business with. And this goes back to an earlier point from Christine, how governments should work together with, you know, commercial institutions, with financial services industries in dealing with this problem.
I'm not sure that that is our future. Our future is that I think people are going to look for investments in Asia. There are actually true trends going on right now, and China is a leader in that trend. One is obviously decarbonization. And if we look at the trajectory of calculations already done in China, I mean, to decarbonize according to the plan that China is on, they're going to have to spend somewhere between 2 and 3% of their GDP per year between now and 2060. I mean, that's trillions of dollars. That's a huge amount of money. So the other thing that China and other areas are doing, including the ASEAN government, is investing in nature conservation and biodiversity. Now, we don't quite know yet exactly how to do that well, but there are companies that are looking at sustainable forestry, sustainable agriculture, sustainable land management. So I think investments going into those areas are also very important. But perhaps at this stage, I'll just say that calculating what is the sustainability or low carbon benefit in data in terms of, you know, how to do that is actually quite difficult. So that's why I think also you have people also looking at data and saying there's a lot of greenwashing, whether it really happens. So I would imagine that the next 10 years, we're going to see a lot of development in this area about how to get it right. And, you know, that's very exciting. And I just want to say that because we're in Hong Kong, and I think the Insurance Authority and other public sector organizations want Hong Kong to be a leading center in all of this. Now, beyond just the business side, you have to have a bit of the research and the intellectual side with it as well, because how to solve the problem, you need the idea, and then you need to research it, and then you need people who can commercialize and monetize it. They all have to work together.
Yeah. Well, I think I had a discussion earlier on with the World Bank IFC. They have a very clear idea. They said, look, the world's battle in climate risk is won or lost in Asia, because Asia accounts for, I can't remember the exact figure, probably 2/3 of the world's carbon.
So it's over 50%.
50%.
Yeah, so dealing with the carbon emissions in Asia is a major global subject. And we are in the middle of this, and therefore looking at the issue with a very clear mind, I think it's very important. So.
Yeah, sure, happy to add to that as well. It's very, very consistent with what Christine's saying. As we've mentioned, emerging markets are a big and a growing proportion of global emissions, and Asia 50%, as we said. So if we don't get it right in Asia, we just don't get it right anywhere. And also, we bear the brunt of the physical risks in this part of the world if we don't get it right. Now, our estimate is that emerging markets are going to need at least $1 trillion a year of investment to get to net zero. That's 6 times current levels. And in theory, there's enough private capital to fund the transition in emerging markets. But as you pointed out, the main barrier to that is country-specific risk. You know, there's political, there's legal, there's macroeconomic, there's currency risk. And addressing those root causes requires a fair bit of institutional and structural reform. And that's happening slowly, but certainly not at the pace that we need it to happen to deliver this type of investment. Now, the only way, in our view, to really kind of tackle that is to mobilize private capital via greater public exposure to loss. So here we're talking about public-private partnerships and blended finance. A much larger amount of public money needs to be directed from countries that can afford it to countries where the transition is really, really critical, but they can't afford it by themselves. Now, those types of mechanisms that can help to do that are things like first loss arrangements, loans, equities, guarantees, even technical assistance in some instances. And there's a couple of things that have happened recently that give me a lot of optimism and excitement, and the same as Christine was saying. So at COP27, we saw a couple of things really start to take root in this space. We saw the agreements around loss and damage for the first time, at least the establishment of a fund, even though we don't actually know what it's going to look like. But the thing that I thought was more interesting was the calls for reform in the multilateral development bank system, because that is critical to being able to really upscale the blended finance space. And the other thing that I was really encouraged by is the types of innovative public-private partnerships that we're seeing coming out in the world now. We saw the Just Energy Transition Partnership being announced at the G20 with the US and Japan and other developed countries, essentially spearheading an initiative to help Indonesia phase out coal sooner than it was meant to. And we're likely to see some more initiatives like that coming out of other emerging Asian countries like Vietnam, possibly the Philippines and Indonesia sometime soon as well. And we've got a similar initiative at BlackRock called our Climate Finance Partnership, which attempts to do something similar, leveraging catalytic capital and private capital into emerging markets infrastructure. So certainly seeing pockets of activity that give me pause for optimism in getting capital to where it needs to go, but it needs to be a lot more than is happening right now.
I think, well, time is running out very fast, and I think that is a subject that we must discuss, and that relates to, you're talking about moving trillions of dollars in that direction globally every year. And we can't just move all this money around by, wishful thinking. There must be a good mechanism through which these things happen. And this goes to something very basic, which relates to data and ratings and so forth. And yet, from time to time, I hear comments, I read papers saying that not too long ago, some academics study all these rating agencies and what constitutes green. Look at the green ratings of a large number of companies and came out with the conclusion that, look, there is basically very little or even zero correlation between the ratings assigned to these companies by different rating agencies. So it raises a very fundamental issue of how much confidence do we have in all this, what is called green and what is not green, and how are we going to, I know all these things are evolving and different standards are coming up, but could you give us a brief overview of what is the latest situation and where things are moving in this on this very important subject?
Well, I do think we're going to make progress, because one of the things that is important is to say, hey, what you're doing, the calculations you're basing things on don't really make sense. Now, I don't necessarily think the companies or the people who put those early reports together, you could say, deliberately did it so. I mean, I've witnessed situations where people were saying, well, tell me what to do. Do I do this or do I do that? So they opt for doing something, but it turns out that the numbers or the way of measurements are not robust enough, or they're not quite, right. So I tend to be a bit forgiving about the greenwashing, but you do have people who are now watching. So it's important to acknowledge that. But it's important to also bring people who can build the capacity for doing better together. And the question is, how are we going to do it at speed? So I think that's the first point. The second point is to do it faster, right? These trillions and trillions of dollars that you've talked about. And you've also talked about blended finance. So I think the public sector, again, is really important. You've got investments where the return could be very high if they work. You've got actually some projects that especially the developing world needs, like waste plants. So we're not necessarily talking about very high technology, but many developing economies need quite basic stuff. And those kinds of projects, who is going to pay for them? You know, blended finance is important, or you need some other kind of mechanisms that you can do them at scale where the return would be relatively modest, but you can get it done at a large scale. Maybe there are investors out there, you know, together with the public sector that can cope with a lower return. And maybe if we want massive technology that are available and can be scaled up, maybe you need to operate on some kind of a non-profit model, because we are racing against time. So this kind of discussion, you know, is it possible for us in Hong Kong to really think this sort of stuff through? Because if we don't conceptualize them yet, we don't argue and think them through, then I don't think we can kind of get that huge surge of different types of finance going into many different types of projects. You know, some are more funky. We don't know how they're going to work out. But some are pretty standard stuff. You know, energy efficiency, waste plants, and water treatment plants. This is all pretty established stuff, but there's not enough money even going into those.
Yeah.
I can just expand on the question about data reporting frameworks as well, if that's helpful. So I think there's two different questions embedded in that, because there's the actual reporting of the underlying data, i.e. the disclosure by companies. Now, we've always been massive advocates of efforts to provide more standardized global reporting frameworks that allow us to speak a consistent language. So we've been a strong advocate for TCFD-aligned reporting, and previously SASB-aligned reporting that was focused on what was financially material, and now, obviously, that's turning into ISSB. Now, the worst thing that can happen is fragmentation of reporting, because that's just not helpful to anyone. So a global alignment of that underlying data is absolutely essential to really helping to scale capital. Where I think people get themselves a little bit confused is when you start talking about data providers that add an extra layer of subjectivity on top of that to give a what is deemed to be a rating of what is good or bad. Now, I don't necessarily think it's a bad thing that those providers can have different opinions, and I think that's a bit of a misnomer that people think it's a bad thing that the rating providers don't correlate with each other. I think it's okay to have different opinions, because people have got different objectives and they're using different methodologies. So it's incumbent upon you as an investor to actually understand the methodology and pick the one that best suits your needs. You wouldn't necessarily, for example, construct a portfolio based on everything that Goldman Sachs recommended as a buy. You would actually look at a multitude of different analyses and opinions across the market and find the one that best suited your needs and make a decision accordingly. So as long as the underlying data comes up the curve in terms of what people are reporting and that it's actually standardized and comparable, I think kind of additional layers of subjectivity on top of that are perfectly acceptable.
Yeah, that's a very good point. Ericson and Gillian, do you have anything to add, you know, on the subjects we covered just now?
Yeah, I can add a quick one. It's like I know we do worry about the greenwashing here and there, and sometimes because of lack of standard, and also making the problem a bit more challenging. I would say look at it differently also. I think there is a term starting to emerge, is the green hushing. There is still a lot of companies is not really committing to do enough. I think this is an area we should do a lot more. And then data analytics and have this standardized taxonomy definitely will help us to elevate the entire industry better further. Gillian, do you have any further on this subject?
Yeah, I actually wanted to follow up something that Christine said in terms of the idea of maybe modest profitability, and something that we certainly think about is how are we measuring success when it comes to sustainability, right? And does it have to always be in very financial terms? And I believe when it comes to sustainability and thinking about our beneficiaries of either investment or our underwriting, perhaps we should be measuring success in a different way, and how many people we're protecting and things like that. So absolutely, we have to prevail as an industry over the long term so that we can pay claims. And to the point around modest profitability, but perhaps we need to be measuring success a bit differently.
That is a big issue. What constitutes as a good system? Anyway, time is running out very quickly, and the Insurance Authority has organized a polling. Can we post the questions onto the screen? Please get your mobile phone ready. Which one of the following is your priority to support a low carbon transition? Okay, I think it's almost time. The majority of youth voted A, committing to climate and sustainability goals. So the second most popular answer is innovating products and services using technology. Tracking greenhouse gas emission, including Scope 3 emissions, is the third most common answer, and then
Well, they're not mutually exclusive.
Oh, yeah. So, what do you think of these answers? What are your advice? We don't have enough time. Can we have no more than 2 minutes from each speaker? What do you think about these polling results, and what is your advice to insurers sitting in this room or online?
I'll start. I'm happy to see the first one in terms of the level ambition. My feedback would be that you almost need the other three to actually be able to come up with a credible plan to deliver on the first one. So it's a great first step, and then the others need to necessarily follow.
I mean, I thought it was pretty good in the sense that everybody knows they need to have a timeline and a target, and then the other three kind of helps you to get there.
Yeah.
I would agree with that, and I support it, right? So make the commitment and pair it with action.
Mm-hmm. Yeah, absolutely. Committing to climate sustainability goals would be the key. And I think this is an opportunity as much as a risk. I think there's a lot we can do, and I think based on the recent development in Hong Kong, policymakers in the fintech, insurtech development and green bond development, I think I'm very, very confident Hong Kong can take a lead.
Great. We still have a little time left, and we have got a few questions from the audience. Some of them are very specific. Perhaps we are talking too much, about issues at the 30,000 feet level. And there is a very specific question. Look, getting data is costly. How do insurance companies incentivize their clients to provide such data? I'm not so sure whether this is a question that you want to address.
I presume the two from the insurance sector will answer that question.
Yeah, I can comment on that. It depends on what kind of data. Data absolutely is critical as a fuel for innovations. I think, I think it's a government also can encourage that, provide open platform for all parties, including insurance company and also other parties, to contribute non-sensitive data in a more standardized way. I think there's a lot of parties are willing to, but the challenge is there's lack of a standard and lack of an ease approach with the API approach or open architecture approach. This is something that I think the government can take a lead along with the corporates out there.
All right.
Can I just add something here? There's a lot of talk about using blockchain for that reason, different degrees of disclosure. So if companies don't want to disclose certain data, to everybody at large in terms of protecting whatever they think is part of their advantage, then blockchain could help, different levels of blockchain. And we're working at HKUST on one such piece of research relating to the construction sector. So the issue is not about measuring emissions from cement. The issue, it's really using that as an example to see how to use blockchain and how to get people to report and for them to feel that they have different levels of ability to disclose and keep the information private within certain groups of people, but not opening it to everybody.
Yeah, I think this opens up a big area of opportunity where data could actually be shared more commonly. There is a last question. I think we still have a little bit of time. I'm not so sure whether anybody here is familiar with this subject. Hong Kong has recently set up carbon exchange market. What opportunities would it bring to the insurance industry? Anybody in this panel who has any idea? Ericson, you know anything about this, carbon exchange?
I'm not so sure, actually.
I think this is the stock exchange. This is the stock exchange.
The collaboration with Guangzhou, I think.
Right now, they're doing, sales between two willing parties. So I think if we're thinking about having a platform where you can trade carbon products, that is probably still, something in the future.
Right. So is there any opportunity for the insurance industry to participate in any
That
way?
I don't know.
Okay. Well,
I can comment, or at least from an asset management perspective, because there's opportunities on both the demand and the supply side of the equation. So you can, I'm thinking about it from the asset owner side, so trying to flip it over, but you could be a buyer of voluntary carbon credits in terms of either offsetting your corporate operations or also the emissions of your portfolio. You could use it to actually partially outweigh the embedded emissions in your investment portfolio. So that's on the demand side of the equation. And then on the supply side, it really would depend what types of projects you are investing in your investment portfolio. But as Christine said, for example, there's growth in things like the natural capital and biodiversity space in terms of investment. Now that is a natural generator of carbon credits that you could look to monetize via selling on a carbon exchange. I will say there's a number of fragmented efforts to set up similar exchanges across the world. So again, we could use a bit of interoperability between the various different efforts rather than too much fragmentation, but there's opportunities on both sides of the coin there.
yeah. Well, anyway, thank you very much to all our speakers. We have covered a lot of ground. I hope this session helps to bring forth the key message that climate change, climate risk, mitigation, and transition is a very big subject. It is up to us, how we could contribute more to the process. Can I call on all of you to give a big hand to our speakers? Thank you.